For today's Targets in Focus, I am joined by Michael Sneyd, FX analyst at BNP Paribas in London. Thank you for joining me, Michael. First of all, let's have a look at how the euro is performing. The Greek elections take place on Sunday. How are the elections affecting the euro at the moment, and how do you expect it to be performing next week?
Well, we've seen the euro has actually recently been far more sensitive to positive data surprises than it has been to negative. So for one example, the announcement of Moody downgrading Spain yesterday failed to cause the euro to sell off. If anything, actually, the market is trading the euro more positively this morning on the back of newspaper articles talking about Germany being more accepting of a move towards a redemption fund type approach to the Eurozone's fiscal situation. So, going into the Greek elections, actually we think we're still likely to see euro respond more to positive surprises than negative surprises.
The safety of the sterling has been quite evident during these difficult times for the euro. What are your predictions for the euro sterling?
Because going forward, the UK has a much more favourable economic outlook than the Eurozone. Also, expect sterling to continue to benefit from reserve diversification. We've seen a couple of central banks comment that they've been reducing exposure to the euro recently, and we think that sterling is going to continue to be one of the main beneficiaries of reserve diversification. I guess, a good example of this is the SNB in their latest data that showed the allocations of their currency reserves. The allocation to sterling had doubled. It's from a low level, from about 4% to 8%, but this is giving an indication that currency reserve managers do have an increasing appetite for sterling. In the short term, we expect sterling to outperform the euro. Going later into the year, we think there's plenty of scope for sterling to strengthen against the euro. When we look at kind of long-term fair value for euro sterling, it's around about 0.76 euro sterling. So this allows plenty of scope for the euro sterling to fall as the UK economy outperforms the eurozone.
The New Zealand dollar lost all of its overnight gains against the Australian dollar today in Asia due to comments from the Reserve Bank of New Zealand's Governor Alan Bollard indicating more optimism towards progress on Christchurch rebuild. How do you feel about this pair, and what are your predictions?
The Kiwi dollar is our most favoured commodity currency. It appears oversold when we look at some of our indicators. And also going forward, the commodity block, we've seen soft commodity prices soften somewhat in recent months. But they seem to be reaching a little bit of stability, and we think there could be scope for rebound, particularly after the recent milk auctions, which are actually quite important for Kiwi, have rebounded in recent weeks. So we particularly favour buying the Kiwi against the Australian dollar. In Australia, we still have the market pricing in aggressive rate cuts, and our economists expect that the RBA will be acting again. We expect the Kiwi to outperform, considering that the RBNZ has provided very little indication that it would cut rates, and so there's a bit of a floor under New Zealand rates. We're currently short Aussie Kiwi in our recommendations. We're targeting a move to 124. This level is indicated by relative interest rates between Aussie and Kiwi. It's also indicated by our short-term fair value models. And we expect this target to be reached within the next couple of months.
The Swiss National Bank announced its latest rate decision this morning. It kept the rate at 120 francs per euro and said it will uphold the measures with the utmost determination. How do you think this decision will affect the performance of the euro-Swiss franc?
We expect that euro-Swiss will continue to trade against the floor for the next couple of months. The SNB are having to intervene to protect the floor. The latest data from them shows that in about the last 2 weeks of May, they're likely to have intervened to about the tune of 70 billion Swiss francs. And we expect that these interventions are likely to continue. One of the indicators that we run is a little model that says if the Swiss franc was free floating, where would euro-Swiss currently be trading? And this model currently indicates that euro-Swiss would be trading about parity with the euro.
Thank you, Michael. That is all for today's Targets in Focus. Stay tuned for more exclusive interviews and press reviews. Goodbye for now.